Hello, fellow risk takers, and welcome to my worst investment ever. Stories of loss to keep you winning. In our community, we know that to win in investing, you must take risk, but to win big, you've got to reduce it. Ladies and gentlemen, I'm on a mission to help 1 million people reduce risk in their lives. That mission has led me to create the Become a Better Investor community. In the community, you get access to our global asset allocation strategies and stock portfolios, our investment research, weekly live sessions, and the risk reduction lessons I've learned from more than 500 guests. Go to myworstinvestmentever.com right now to claim your exclusive podcast listener lifetime discount. Fellow risk takers, this is your worst podcast host, Andrew Stotz from A Stotz Academy, and I'm here with featured guest Vitaliy Katsenelson. Vitaliy, are you ready to join the mission?
Absolutely.
Something tells me we're going to have a great episode today. I'm really looking forward to it, and I want to introduce you to the audience. Vitaliy was born in Murmansk, USSR, and immigrated to the United States with his family in 1991. After joining Denver-based value investment firm IMA in 1997, Vitaliy became CIO in 2007 and CEO in 2012. Vitaliy has written 2 books on investing and is an award-winning writer. Known for his uncommon common sense, Forbes Magazine called him the new Benjamin Graham. He's written for publications including Financial Times, Barron's, Institutional Investor, and Foreign Policy. His articles are also published on his website, Contrarian Edge, and in audio format on his Intellectual Investor podcast. Vitaliy lives in Denver with his wife and 3 kids, where he loves to read, listen to classical music, play chess, and write about life, investing, and music. Soul in the Game is his 3rd book and his first non-investing book. Vitaliy, take a minute and tell us about the unique value that you bring to this wonderful world.
Well, it depends on a constituency. So for my clients, which is just 350 families, I bring, I guess my goal is to produce some good returns while minimizing the volatility of their blood pressure. So that's that my goal is to make their life better, right? Because people come to me and turn to me their life savings and say, Vitaliy, that's all we got. Please don't screw it up. So I think that's my goal, to enrich them financially. My family, I think Value Brain has been trying to be a good husband for my wife and a good father to my children, and for my friends to be a good friend. For the rest of the world, I think Soul in the Game is my finest contribution so far, or the most important contribution so far. So finest is somebody else to decide that, but that's probably my most important contribution. And I also, through my articles, I think I try to educate people about investing, life, and classical music. So that's my kind of contribution to the world.
And it's kind of interesting to hear you say that, because I know I've subscribed to your email and have seen your articles over the years, and I think you've made a huge contribution there, not only to investing, but as you say, to music, to art, to all the different things that you like to explore. So it's kind of interesting to hear you say that this latest book is actually where you think you got the biggest contribution. Maybe you can just tell the audience a little bit about what they should expect when they read this book.
That's a good question. Difficult to answer. What they can expect. This is the book where I downloaded basically kind of most of the wisdom I got. So I put every ounce of my soul into it. And in the book, I discuss my journey of coming to the United States from Russia. Actually, I used to say from Russia. Now I say from USSR, because I'm embarrassed for Russia right now. I talk about classical. I talk about classical music composers. I talk about parenting. I talk about creativity topic that fascinates me. Talk about meditation, about self-improvement, uh, about Stoic philosophy, um, about classical music composers. So somehow all these topics, not so neatly, but do align and lend themselves, into a book. And my goal, when I was writing this book, was just to make the world just a little bit better. And I'll be in all honesty, and that was probably the most altruistic endeavor I ever had in my life, because it doesn't matter for me financially what the book does. If it becomes next Harry Potter, my life is not going to change. But I just want people to read the book, and I want to make their life a little bit better. And the feedback I received so far, people wrote to me saying, thanking me because I have had that kind of impact. So that's,
Exciting. Well, I'll have the link in the show notes so folks can get it and get into it. One other thing that's interesting about you and myself is that we both got on a plane in about 1991, 1992 and flew far away from home and never went back. Originally I was in Ohio. Then in about 1985 or 1986, I moved from Ohio to California. And then I moved from California to Thailand in 1992. What's kind of interesting is that was the beginning of kind of the hollowing out of manufacturing in Midwest America. And it's like it was all the jobs were shifting to Asia. And that's where I wanted to try a different life. I wouldn't say that I was unhappy with the US, but there were some things I didn't like. And I just thought, Asia's rising. I want to go see if I can survive there. And we also have another commonality in that we both kind of found CFA as something interesting that grounded me. Here I was in Thailand, and I was able to get involved with CFA in Asia, which really added a lot to my career, to my relationships and friendships. What was it, what has your experience been about making that move, and why did you never go back, or why did you, never go to another state? You went to one place, like I went to Bangkok, and I never moved.
Interesting. So, well, we left Russia because at the time, Soviet Union was falling apart, and you had no idea how the cards are going to fall. It could have been complete chaos and civil war. Who knows? So, and I never regretted the decision. We did go back once. I went there for about a week in 2008, I think. And and after that visit, I realized how lucky I am to be in the United States. But why we was there's an interesting story here. So Murmansk, if you look at the map of Russia, you look on the left and you go higher, and then go higher again.
Mm.
If you basically get, Murmansk is above Arctic Circle. And so during the winter time, there are basically months where you're not going to see much sun at all. Now, if I moved from Murmansk to Seattle, it would have been a huge upgrade by amount of sunlight I would have received, right? But I didn't. I moved to Denver, which is probably one of the sunniest cities in the United States. So the contrast between Murmansk and Denver is, like, at least, especially when it comes to sunlight, is absolutely incredible. And it's a wonderful city. The weather is terrific. I just absolutely love it. And it's located in the middle of the United States. It takes me 3 hours to get to New York, 2 hours to get to California.
Yeah.
So so I love it here. Let me talk about CFA a little bit. Actually,
Yeah.
You mentioned it. I have a lot of complex and conflicted feelings about it. But one thing I realized, CFA is incredibly important if you live outside of the United States, especially if you live outside of the United States. And here's why. Because if you go to a business school in the United States, you more or less know the level of education you get. If I'm hiring somebody who went to university in Kiev or university in Bangkok, I have no idea the level of education they have. And actually, I came to this realization about 4 months ago, I hired an analyst for my firm in Kiev, and he has a CFA. And it's him having a CFA was like very important to me, because I knew exactly what he knew. I knew how much he knows about US GAAP, what European accounting standards, etc. So that made that hiring decision so much easier. That made this hiring decision so much easier anyway. So that's my biggest problem with CFA. I think they spend too much time on modern portfolio theory, or at least they used to when I took it. And I would argue studying ethics is important. It's very important, don't get me wrong, but it should not be 15-20% of the curriculum. So I have my own beef with them. But again, if you live outside of the United States, it becomes a very important designation.
It's a great point. I would argue that the ethics actually becomes more important as you look outside the United States also. And
maybe you're right. Yeah.
One of the things I have a couple businesses in Thailand. One of them was a factory that we've operated now for almost 28 years. And I can say that we have basically not had to deal with corruption in Thailand. And that's pretty rare. I mean, if you think about, I don't know, if I went to Russia and started a factory, I could imagine. If I went to China and started a factory, if I went to Indonesia, I may have to deal with corruption. But Thailand is pretty impressive in the sense that we haven't had to deal much with corruption. But what I liked about the CFA as I was interacting with other CFA charter holders around Asia is that I could talk to them about my ethics and following the CFA code of ethics. And that just meant that, I knew that they were trained to a certain level of ethics, that they're not going to try to play some game or something like that. And it kind of made the discussions about business, a lot easier for me. And so that part, I think there is some value to that.
Oh, absolutely. And my issue is
too much on the exam.
Of your study. Yeah, no, I think that's right. I think that's exactly right. And I think they make it, it doesn't matter, but the bottom line, I think it's important to get her on, but I think the amount of it was too much. That's it.
Yeah. So maybe I just have one other question about your style of investing. It's value style of investing. How do you handle the time periods when value underperforms? Does that change the way that you invest, or is your investment style value but actually has other components to it? Or how did that work, I don't know, over the last 10 years or 15 years when value had some periods of time where it really struggled?
Well, I don't change my stripes when they're not popular, when things are not popular. But I think value, what value investing means is misunderstood. For a lot of people, value investing means is just buying statistically cheap stocks.
Mm-hmm.
I would argue if you just do that, then you need an IQ you need an education level of a 9-year-old, because all you need to do is to count to 10. Just buy any stock that has a PE less of 10, and then you become a value investor, based on that line of thinking. No, I think value investing is a lot more than that. It's philosophy, and I would rather not go into it because I wrote this great essay, the 6 commandments of value investing, and people can download it. It's absolutely free on the 6commandments.com, where I just basically talk about philosophy. So value investing is a lot more than just kind of a recipe of buying stocks that trade less, 1 times book value less, or 10 times earnings less. It's really a philosophy, and you make adjustments. Certainly, like I made adjustments that would fit my thinking about businesses, etc. And you look at my portfolio, some of the stocks I own would look like value stocks you would expect to see. Some of my stocks look that you would not expect to see in a kind of traditional value manager. And it just and the only difference is that I think both sets of companies are undervalued. It's just some of the companies I'm looking at the earnings, not that just lie in front of me, right? Like staring in the face.
Yeah.
Right? Earnings are 4 or 5 years out. And based on those earnings, those companies are undervalued. So just, that's.
I'll put a link in the show notes to that piece that you just mentioned to make sure that anybody that wants to read it, they can get access to
Yeah.
it here. So, well, now it's time to share your worst investment ever. And since no one goes into their worst investment thinking it will be, tell us a bit about the circumstances leading up to it, and then tell us your story.
Yeah. So when you think about worst investment, people think about the stock, like, typically, you buy a stock, it declines, you lose a lot of money. That's your worst investment. But the thing is, think about this for a second. If I buy a stock and declines, the most I can lose is 100%. If you don't use leverage, right? And I never use leverage, and I think most people should not use leverage. Okay, so the most I can lose is 100%. So, but my worst investment actually, where I lost 300%. Okay, so that's it. So how do you lose 300%? Well, I'll tell you how. I probably 400%. So there was a company called EA, Electronic Arts, and I bought them in 2012. And if you've been reading articles for a while, it depends how long you've been on my list. I've been writing about it, Electronic Arts, because in 2012 when I was buying it, it was named by Consumerist Magazine as the worst company ever. Like, just you have to understand, when I say this, 2 years in a row, the company, like 2 years before that, the BP after the spill was named the worst company of the year. And I think a few years before, Philip Morris and one of those companies was or Ultra was named the worst company. So the Electronic Arts made this list 2 years in a row. And Electronic Arts makes video games, right? And I think when I was buying it, they had a SimCity game that had some issues. I vaguely remember the details, but they had some SimCity that has some issues. They spent $500 million, $500 million on a Star Wars, game, which basically flopped. So there's like, and there was let me tell you why they actually made on the cover of the magazine. They made a game where no matter what you do, no matter how you play, you lose. People were outraged about it. Like, they really had to try hard to kind of piss off the consumers.
Did
But
they announce that, or that just was inevitable that you never could win?
I think people just figured it out. Like, no matter what you do, you can't win. Which is almost like anti-American, because the whole optimism has been completely squashed. There's
no hope.
So anyway, no hope, absolutely no hope. But my insight when I was buying the stock was, you have to remember, this is 10 years ago. This is where a couple of things were happening. Number one, there was a transition from people buying games at the store to downloading games. So instead of going to Best Buy to buy a disc or a DVD, you actually went to the website and downloaded. Number one. Number two, smartphones became a very important market for video games. I remember making this, like, let me give you this analogy. Okay. Like, before smartphones, most people who played video games, especially in handheld devices, were children. Because can you imagine going to your dentist office, and while you went in for your appointment, you're sitting on a Game Boy and playing video games? You would just look ridiculous, right? Completely ridiculous. Now, when you have a smartphone and you're playing video games, nobody cares, because it became an acceptable behavior. By the way, I think I'm sitting outside. There's so much ambient noise. I apologize for this.
No, it's fine. It's fine.
Okay.
No problem.
So, anyways, so that was it. And obviously adults have a lot more money than kids do, right? So this huge, EA had a huge IP, a huge amount of IP. They had a lot of video games. They had a lot of fans, despite a few things that happened to them the previous few years. And my insight was that the market is about to become so much larger.
Right.
And this is important insight. Also, their profitability will get much larger because when you download a game from their website, you don't have to send 20 or 30% of revenues to Best Buy. And you have no inventory costs, etc. Yep. So, and if you look at the EA's top line, its top line was flat. But inside of it, what you saw that the packaged video game sales were declining, and digital video game sales were going up. Digital video game sales came with much higher margin, and that is before the smartphone market exploded. So that was my thesis basically. Okay, so but I think we bought the stock at $16, and Andrew, for the next year, like they would have a month, they would have bad news, another month of bad news. There was all this, and the stock got to $10. I think they added more to $13. At $10 a year later, I was just frustrated. I was, completely frustrated. Then over next year, so now I'm on the stock for 2 years. The stock basically goes up to $26. And I make a celebratory dance. I just doubled my money and I sell. And the reason I did this because I was so exhausted. I was so exhausted owning the stock. And that's why I sold. Today, the stock is at $128.
No.
Okay? But this is the most important part. It's at $128 for the right reasons. It's not because it's a bubble stock. And and by the way, you can say it's 10 years past. It got to $100 in 2 years and 3 years after I sold it.
Yep.
The point I want to make. So what was the mistake? The mistake was when I owned it. It was a very painful experience only the first year, and I let that pain basically drive my sale. Like in the sense that if I coldly look at my original thesis, it was playing out. The earnings were going up, and I was basically selling it at depressed valuation, even when I was selling it. But I wanted to cement the gain, and I wanted kind of I wanted to. So I sold it completely for psychological reasons, not fundamental reasons. And I look at the decision now, and another thing is one modification I made to my strategy. We always look at earnings 4 to 5 years out.
Mm-hmm.
If I was looking at the EA's earnings 4 or 5 years out, I was probably selling the company at 5 times earnings, like some insane number. And that became very important lesson. That now when the company goes through a difficult time and difficult quarters, I try to zoom out. I try not to be that close to it, as long as my theses are still on track.
Right.
Okay. And that zooming out actually helps me to kind of maintain my sanity. And you also have to remind yourself, I have a portfolio of stocks. There is no way the company I own is going to perform well every quarter. Just every single company in my portfolio. It's just impossible. If that happens, that's just a fluke. It's never happened to me actually. So anyway, it's the worst investment ever because it's I lost 3 or 4 basically almost $100 on the table. So I could have 10x my money. I just doubled it.
Wow. So how would you summarize the lessons that you learned?
Number one, you have to be able to when a lot of times when you make investments, it's a time of what I call pain arbitrage. you're basically willing to take short-term pain for long-term return. And when you do this, you have to, and when you go into this with basically with your eyes open, you have to be willing to stick through that. And then you should not, don't want this to impact your decisions. And you don't want it to shrink your time horizon. I think that's basically the most important lesson I learned.
Yeah. Maybe I'll share a couple things, but I think the biggest thing that I think about is that, you know, in my experience, like I've done my valuation well, I've looked at the company, you know, carefully, I've done a lot of work, and then buy it, and then it falls. And sometimes I just look at it now and I say, maybe I just bought it at the wrong time. You know, like it's the valuation's there, the story's there. It's just that, you know, if I had perfect timing, it may be down another 30, 40%, and I should have bought it there. But, you know, you can't always buy it at the right time. And so sometimes I have some portfolios where we use stop losses and we exit, and then later we re-enter that position. And sometimes I've gotten questions about that particular strategy, and I just say, we probably entered it at the wrong time, and now we're re-entering it, thinking it is a better time now. What do you think about that?
I think, like, to me, stop loss is kind of antithetical with value investing.
Yeah.
Because when I'm buying a stock, I'm basically, there is an assumption that I have no idea what the stock price is going to do over the next 6 months or next year, and therefore, So I'm going to talk about my book a little bit.
Yeah.
But Stoics have this concept called negative visualization. So when I buy a stock, I'm kind of imagining now that the stock can decline 30, 50%. And I kind of I have a Tesla. I'm going to use so many analogies here. It's not funny. I have a Tesla car. And when I'm going long-term drive, and I tell the car that I'm going to go to the charging station, and it says it's preconditioning its battery. So for the charge, I'm not sure. I have no idea what it's doing, and maybe this is just a gimmick, but it makes me feel like, you know, my car is going to be prepared when it's going to charge. So I think you precondition yourself as well through negative visualization that the stock you bought can decline 30, 50%, and therefore when it does happen, it doesn't sting as much. And I think that's another thing, you know, I learned from that experience. And you know, and the thing is, you really need to have a long-term time horizon. And part of my competitive advantage, I have a long-term time horizon, and I have the tolerance for pain. Well, or at least I should have tolerance for pain. Well, with EA, I didn't, because the pain I experienced, I shouldn't have experienced it to begin with, but it's also led me to an irrational decision to sell the stock. And it was in a bit of a, you know, sometimes you sell a stock, it goes up for reasons that are completely, you know, silly, etc. That was a completely wrong, you know, well, in this case, earnings went up a lot since I sold it for the reasons I thought they would go up. So it's everything was playing out, you know, as I was expecting. I was just exhausted.
Yeah, it's amazing how emotion, you know, can even get the best people down who really know the fundamentals. So I think that's a lesson for the listeners and the viewers, is that, you know, you really got to think about those emotional things. And as Vitaliy said, you know, I think imagining that I need to understand that this stock could fall by 50%. Why am I owning this thing? I should see that as an opportunity, you know, as, you know, something, this is the opportunity. And I guess that.
And I think another thing is that looking at stocks in the portfolio context is very important. Just realize this is one of 25 stocks I own. And once you look at this, you know, just you got to be careful that not to stop doing research and and not to become indifferent. But at least but I think at least when you look at it from kind of in a portfolio context, you realize, okay, this is, I'm going to be as rational as possible. This is one of 20 stocks I own. I think 25 stocks I own. And I think that's going to help you to kind of maintain your sanity.
Yep, that's a great point. So based on what you learned from this story and what you continue to learn, what one action would you recommend our listeners take to avoid suffering the same fate?
Write down your thesis. Zoom out in the short term if this thesis is struck in long term. And when you make sell decisions, look at, what do you think the company's earnings power is, 3, 4, 5 years out.
Great lessons. So what's a resource that you'd recommend for our listeners? I'm assuming it's Soul in the Game, but is there any other resource besides that?
Well, I listen to a lot of podcasts. I listen to a lot of podcasts, and then I listen to podcasts about classical music, about investing, about geopolitics, about macroeconomics. So I think podcasts I probably spend about 1 or 2 hours a day listening to podcasts, which is almost like I start to read a little bit less than before because I think some of the time we now allocate to podcasts. Let me see. No, I think that's let me just stop there.
That's so much value in podcasts out there. I mean, I was just listening to your TIP interview, and so much value available, and it's free. It's amazing. And I think back to when I moved to Thailand. I started as an analyst in 1993. That kind of information just wasn't. I had to, every time
Absolutely.
I left Thailand, I went to bookstores and I carried suitcases of books back to try to figure out what the heck is, what am I doing? And nowadays it's just amazing how available it all is.
Absolutely.
All right, last question. What's your number one goal for the next 12 months?
My number one goal for the next 12 months. Let me see. I don't set annual goals. I set daily goals. Because when we kind of make this New Year resolutions usually, and at the end of January or early February we forget about them. So I just wake up every day and I kind of live every day if it was my last day, and so I just, my daily goal is I want to be kind to other people, and just have a healthy day, happy day, and just be creative. And there's right now I'm talking to you. There's my daughter right there, and she's making very funny faces.
Yeah.
And
Dad, come
and
on, let's go, let's eat, let's do this, let's play.
That's right. Yeah, that's the happiness in my life.
There's
right
the joy.
So that's.
Well, my daily goal was to have a good interview with you, and I think we've accomplished that. And listeners, there you have it, another story of loss to keep you winning. If you haven't yet joined the Become a Better Investor community, just go to myworstinvestmentever.com right now to claim your lifetime discount. As we conclude, Vitaliy, I want to thank you again for joining our mission, and on behalf of A Stotz Academy, I hereby award you alumni status for turning your worst investment ever into your best teaching moment. Do you have any parting words for the audience?
Just enjoy life and prosper. Those are my parting words.
Wonderful words. And that's a wrap on another great story to help us create, grow, and protect our well fellow risk takers. Let's celebrate that today we added one more person to our mission to help 1 million people reduce risk in their lives. This is your worst podcast host, Andrew Stotz, saying, I'll see you on the upside.